Hi guys, welcome back. Today we are going to be analyzing PNGS Gargi Fashion Jewellery Limited. So we will, the management has given a really broad-based guidance actually, and so we will talk about the business model, the guidance, and of course the risk that this business possesses, right? So all in all, let's just go and try to understand it. I'm just going to share my PPT, a very small one prepared. Yeah. So today we're going to be discussing about PNGS Gargi Fashion Jewellery Limited, right? So first of all, let us understand what is this fashion jewellery, right? I will probably just show you the product also. I think you can understand. See, this is the products as you can see. So what is this fashion jewellery mainly? Fashion jewellery is, am I in the right slide? Yeah. So what is fashion jewelry, right? Like if you see the entire jewelry space, right? Today it is filled with, when you think about jewelry, the first thing that comes into your mind is gold, right? But gold, as you know, it is very hard to afford, right? One is because it is expensive, right? The second thing is also, it becomes very tedious also for you to remove and rewear every time, right? That is one thing, right? And on the other hand, let's say you want you have the artificial jewelry as you call it. Now, what is the problem with artificial jewelry? First of all, they don't give you that rich feel. That is one thing, right? Of course, like it looks very tacky. And the second thing is, of course, it is not water resistance or sweat resistance. It tarnishes if water falls on it, right? So there is this huge gap, one, where people want the affordability of the artificial jewelry, since it as affordable as an artificial jewelry, but also it needs to have a characteristics of gold jewelry, because as you know, gold jewelry is it is of course it is tarnish free and waterproof, right? You won't see the gold car, it won't fade away, right? So that is where this whole fashion jewelry comes into play, right? Fashion jewelry comes into play, like I told you, it is basically this brass, either it is this 92.5 silver sterling, or this brass and copper metal that is plated with this gold plate, like 18 karat ka gold plate jo hota hai, you plate it with that. And you sell it, right? So it makes it tarnish proof and waterproof. So it's either that, or of course like plain brass and copper jewelry, or your 92.5 sterling silver, right? As you can see from the product category here also, can you see just pure brass and copper ka jewelry that is there with some artificial gems, as you can see, or this silver jewelry. Can you see here silver jewelry also, again with this certain artificial beads with this 92.5 silver sterling, right? This is what it is. Now, why are we seeing this whole trend? Why is this trend changing towards this fashion jewelry? As you know, right, if you're a woman, I think I can speak more for a woman here. If also, when you talk about the jewelry market also, right, majority people who are purchasing this is also women, right, around 90%. So what do women, you would have seen one thing. I think if you have a woman in your life, right, you would have seen, they like to really mix and match things, right? They want their clothes to match the earrings, the accessories should match the bag and the footwear, and of course these days it is even jewelry. Like take for me, for example, right, today I'm wearing this white and blue color pinstripe dress, and it was just an unconscious thing, that I just reached out to like a white pair of earrings and I wore it, right? Now think about this. I can't do the same with gold jewelry, right? Like I can't, like, how many gold jewelries can I buy to match my outfits? It's nearly not possible for a common man. So this is where this entire fashion jewelry comes into play. And right now you are seeing, right, you are seeing a lot of women go out and work, right? At least compare now to the last 10 years or even 5 years right now, we are seeing a lot of women, working class women is increasing as we speak, right? And this gives another push to this segment, because the more women go out, the more outfits that they buy, and they will need more earrings to match these things. So this is where the whole, the demand or the trend is changing at the end of the day, right? That is one thing. So if you have to talk more about Gargi also here, like I told you, their fashion jewelry that is there. If you see their entire product line, the product ranges somewhere between 500 rupees to 2000 rupees. That is more or less the product range. And they're catering more into women only. 90 to 95% is women. And like it is more towards this millennial and Gen Z women, in the age group, mostly if you see the customer category is somewhere between 20 to 25. But of course, it is a very broad-based customer. They cater to literally between somewhere between 15 to 30 categories. And also one of the reasons that their price point is between 500 to 2000 rupees is, like I told you, they want to cater even to Gen Z people also, like, somewhere between 15 to 20 years old. See, these people get hardly pocket money of what, 700 to 1000 bucks. So even if they get that 700 rupees ka pocket money, they can buy something in the range of 500 and below, right? In that range they can buy some jewelry for them, or they want to gift it to their friends also. That is why they have, they have a product category going from 500 to 2000 rupees also. So this is their entire, how do I tell you, the entire model. And one more thing to highlight about their model is also the fact that, they're an asset light model, which means what, they don't have in-house manufacturing, they have contract manufacturing. Now, why is this very essential also in a way? I'll tell you. See, Gargi is more like, if I have to draw a resemblance, Gargi is trying to be the Zara in the fast fashion, in the jewelry space. Like how Zara is a fast fashion, in clothing space, Gargi is trying to be the fast fashion in the jewelry space. Okay. And what is one thing about fast fashion, right? You have to get new products, you have to get the new products, but you have to also do it very quickly, right? So these are the two things, two things that are needed for any fast fashion. So that is what they're trying to do. So basically, they gauge the market, they see, what is the current trend, what is going on in the market, and so forth. And then after that, they give out the designs to their, they give out these trends to their designers. The designers, they have some in-house designers who will design these jewelries, and then they send it to the contract manufacturer, right? They give it to these manufacturing people, and they tell, please go provide us 500 to 1000 piece. So every model, not model, right? Every unit or a piece of jewelry that they make 500 to 100 pieces. Sorry, I think it's model, right? Every model, they will make 500 to 1000 pieces of that jewelry. And after they make it, they'll check for the quality of that jewelry, and then they will send it to their stores and or the online, how do I tell you, the online place. So this is how they, the entire process for them is. And as of now, if you see in FY23, 10% was coming from online sales, and the other 90% was coming still through the shops or the retail shops, right? You can see here also the entire, how do I tell you, this is taken from the DRHP. You can see the entire process, like, they buy the, they figure out the designs, evaluation of product is done, then they negotiate with the supplier, they place an order. After that, they carry out the quality check, they get the delivery. It's ulta, sorry, it's like this. Once they get the, once they place the order, they get the delivery, and they carry out the quality check, and of course they do the barcoding, and then they send it to the, how do I tell you, they send it to the different location, either their stores and of course their e-commerce website, right? And then the actual sale is done. This is their entire process on how the entire jewelry, from the manufacturing, from the design, the manufacturing, and to the end customer, how this is done, right? Another thing to note down here, just a little bit of history about this company. This company was started in 1837, right? Earlier it was founded, it was under the name called PNG Jewelry. Like, I am sorry, I forgot the name. I think it's something Narayan, right? I think I'll just link it down in the thread that I write. So that's how it was started earlier. And earlier when they started it, they were selling this, silver color ka idols. I think if you were probably in the 2000s, it was a custom, I think that we had this custom of gifting silver color idols, Godka idols. Even now people gift it during Diwali and all, if but not as much as earlier. But yeah, this is what they used to do. They would do some brass jewelry, silver jewelry, and idols. This is what, and the silverware, upper plate and everything. This is what they would do it earlier, right? Under the name PNG Jewelry. Then after that, what happened? They wanted to get this fashion jewelry, like I told you, like fast fashion, something that caters to millennials, and fast moving product. For that, they started another brand called Gargi by PN Gadgil and Sons. That is what it is. That is how they started it, right? And again, like I told you, they have a very diversified product. Everything, whether it is earrings, bracelets, necklace, everything, all of that, anklets, everything that they have. Now, what is the difference between this PN Gadgil and Sons and this Gargi jewelry? Now, Gargi, like I told you, is a brand, right? Gargi is a brand under which they sell this fashion jewelry, right? And this is sold by this PNGS fashion jewelry. That is nothing but PN Gadgil and Sons fashion jewelry. These people have the brand called Gargi. Now, what is the difference between this and the original PN Gadgil and Sons, right? What is the difference? Now, here, both of them, if you see this company, PN Gadgil and Sons, PNGS fashion jewelry, both of them have the same promoters, right? That is Govind Gadgil and Renu Gadgil. I think those two, they are the promoters, and they own 99% of the equity, right? There is no change in promoters. The only difference is the fact that here, in PN Gadgil and Sons, that is that they, these people earlier, they were doing this gold jewelries, silver jewelries, like I told you, right? They were not doing fast fashion jewelry, only this gold, silver jewelry, silver idol ka ye sab kar rahe the, right? Now they wanted to do another brand only for this, like this fast fashion moving jewelry, like fashion jewelry. So for that, they invented a brand called Gargi. right? And this Gargi was, is handled by this company, by this people called Modak family. Modak family and this Gadgil family that are there are are family friends, and they've been family friends for a very long time. And although PNGS Fashion Jewelry have the same promoter, right? Both Gadgil and Sons and PNGS Fashion Jewelry, 99% equity is owned by Gadgil only, like they are the promoters and everything. But having said that, the operations for this is handled by the Modak family. That is the only difference. The operations is handled by Modak family. And the another reason was they wanted to have a separate brand for fashion jewelry. They didn't want, because this brand is very well-known brand. This Gadgil and Sons, if you see, in the areas of Karnataka, Maharashtra, and Gujarat, it is a well-known, trusted brand in terms of gold jewelry, silver jewelry, and idols, making idols out of silver and all. It is a very, very well-known brand, and that is why they didn't want to dilute the brand. That is why they came out with another brand called Gargi, and they made it under this brand, PNGS Fashion Jewelry, and also. Like I told you, Modak family is running it. That's it. The only contact that we have is this PNGS Fashion Jewelry that is there. They have to give 10% of the sales every done to PN Gadgil and Sons, and 3 lakh every month. They have to give to this PN Gadgil and Sons. That is all. That is the only thing. There is no cash exchange that is happening between these two companies. Like no kind of inka cash jiska operations. They're not sending it here. None of that. Only for using the name and everything. They have to give 3 lakhs every month, as well as 10% of the sales. And until FY23, they had 30 stores. Only 30 stores were there until March FY23. And these Gargika stores, they were under the, inside this PN Gadgil and Sons, PNG Jewelry stores. Inside that only Gargika stores were there, or they were using their brand name, like, Gargi by PNG and Sons. As a result, because of this, they have to pay 3 lakh every month, as well as 10% of the sales. So this is the only difference. Now, what makes me so interested in this company, like I told you, this is just to wrap it up the entire business model. These people do fashion jewelry, basically copper and brass ka jewelry, or sterling 92.5 silver ka jewelry karte hai, right? The product range is between 500 to 2,000 rupees, and they cater to millennials and Gen Z, ranging from 20 to 25 years old, and or 15 to 30 years old. That is more or less their customer target, right? And the other thing is, of course, they have contract manufacturing. They don't manufacture anything in house. That makes them an asset light model. And the other thing is, of course, they have both online as well as offline. Until now, 10% ka sales aata hai online mein. And the other difference that I told you between Gadgil and Sons and PNGS Fashion Jewelry, what is the difference, right? So that is that about PNG Gadgil and Sons. And the other thing is, this is what the entire copper and brass with a gold plated jewelry looks like, more or less. So yeah. So now what makes me interested about this company is the management has been very bullish on the guidance. As of FY23, the top line was, the entire year ka top line mein bol rahi hu, FY23 ka top line was 28 crores. And they had given a guidance that by FY24-25, that is by FY25, we will achieve 100 crores in top lines. So in 2 years, they will do 100 crores in top lines, and that gives you what, a CAGR of 88%. So very, how do I tell you? It very bullish. So we will see actually, can they do this? Three things that makes me interested here. One is the management guidance का ये guidance दिया है 100 crore का. दूसरा जो है कि like ये store expansions. I keep always talking about in my consumption businesses. If you see, why store expansion is necessary for future growth, right? Three things. Management का guidance है 100 crores. One is the store expansion that is happening, and the other thing that is happening is change in product mix. I'll talk about it later, right? So I explained to you about the management का guidance. Now see, this totally depends on one thing, that is the execution, right? Agar ye execute karta hai ya nahi, all in all, it depends on that, right? 100 crore. The store expansion part, let's come to this, right? I don't have any Excel prepared. I'm sorry. I'm very old school person who uses a pen and paper. So let's just stick to this. So I'll try to explain it as simple as I can. But here is this in store expansion. So what is happening in the store expansion is, until now, until FY23, like I told you, right, there are 30 stores. All of these 30 stores were company owned and company operated. Now, what happens when you have company owned and company operated stores is it becomes very difficult for you to scale up, right? Because see, if you are well known in that area, then it is okay. You understand the different geographies. You understand what the customer likes and everything. But as you increase, as you go to the newer geographies, it becomes very difficult to gauge this trend, right? So scalability becomes an issue in COCO model. We have seen very few COCO models, that have done really well. But having said that, COCO model में थोड़ा scalability issue होता है, right? And the other thing is, अगर आप FOFO model में जाते हो, franchise franchise में जाते हो, what happens? Of course, आपका क्या बोलते हैं, like you will have immense scalability. But another thing comes into question is, will you be able to maintain that quality in every store? Example is Domino's. See, Domino's at the end of the day, if you see, growth is there, right? Like after they expanded and went into the whole franchise space. But what did they have to compromise on is little bit is on the quality, because there are certain times, like you would have seen maybe the store next to yours, Domino's, will have like a maybe a little bit better pizza than compared to maybe some other outlet, right? So little bit quality ka dilution ho sakta hai in FOFO model. Again, ho sakta hai, I'm not telling it will be, right? So these are the things. And the other one is FOCO model, that is franchise owned and company operated. Now, franchise owned and company operated is the best of the two worlds, right? Because you're franchising out, aapko scalability mil raha hai, right? That is one thing. And company operated, you will be able to maintain some kind of, how do I tell you, some kind of quality here. You can gauge the quality because you are taking care of the operations. Here, this is what the major change that is happening in Gargi. They're moving from COCO to FOCO, right? Matlab kya? The franchise will be, will be owning the store, everything. They will be responsible for the employees and everything. But the operations show hota hai us store ka, regarding to inventory, kya ho raha hai, kya ja raha hai, that entire thing will be taken care by Gargi, right? So this is what they're moving. One example of this, where COCO to FOCO, because of that an improvement has happened, is Kalyan Jewellers. You would see in Kalyan Jewellers, right? Earlier they were having company owned, company operated COCO stores in the south of India. Because of that, kya hua? They had immense problem with respect to scalability, right? And that is why Titan did really well because of scalability, but they had problem with it, right? They could never penetrate into the northern markets. Recently they started the entire FOCO model, and after that you would see that the ROE of the company improved. The trajectory of the ROE also, you've seen it improve. It went from 4% to 13%, and after that you see the trajectory of the stock movement also as a reflection of that. So similarly here also, another good thing that is happening is moving from COCO to FOCO, right? Now let us just see the store expansion ka CAGR, right? If you see in FY23 they had 30 stores, and the management told by FY25, in 2 years span, we will have 50 stores. We want to open 50 stores. So 30 to 50 stores, 2 years ka CAGR aapko milta hai 30%, right? So all in all, good 30% CAGR, right? But interesting thing that happened here is, although we are into 5 months after FY23, the company has already opened 10 stores. Three exclusive stores open kiya hai, okay? That is only Gargi, 1 franchise, and 6 shop-in-shop stores. What is shop-in-shop stores? Like example, you would see in the Shopper Stop, right? Shopper Stop एक बड़ा shop होता है, उनमें you would see एक छोटा like Fossil का एक दुकान आपने देखा होगा, एक छोटा सा stand. Similarly here also, Gargi's also has opened 6 shop-in-shop stores. So all in all, a great thing, right? Because see, in 5 months alone only they have achieved their target for the entire FY23 financial year. So of course, within the 7 months that is there, even more they can achieve, right? So like I told you, yahan se store expansion rate in 2 years only you're getting 30%, and already they have achieved is year ka target. So of course, in the next 7 months with more stores opening, you can see that the store expansion rate ka CHR is also, it can go up to, in the 7 months again, even if they add another 5 more stores, it will be 15 stores. So that is around 50% CHR in store expansion rate only, right? And agar aap new store open karte ho, wahan se bhi growth aayega hi, right? So that is one thing. Now the only thing that the problem happens is, because you're moving from COCO to FOCO model, the risk here is the margins will fall down, right? The margins will currently the margins here are around 20%, yeah, 20.93 to I think 20 to 22% is a margin. And the management has told, for the entire FY23 it was 20% the margin. And the management has told, like moving forward, because you're moving from this COCO to FOCO model, unka margins jo hai, it will fall from 20% to around 9%, 6 to 9% you can see, because of course, since they're expanding so rapidly, right, and it is also franchise owned, margins are bound to fall. This is similarly the case with even with Kalyan also, same thing. ROE has improved, but again margins has fall because it is just the nature of the business model. If you go to FOCO, again margins will fall. You have to compromise on margins. Yeah, that is the only issue here. The margins are falling. Other than that, nothing. The other good thing that has happened here is the average billing ticket that is there. If you see here, since the product range is hardly 500 to 2,000 rupees, people tend to buy like 2 to 3 products together. So if you see here also, the product ka billing ka average ticket is there, or the average billing that is there, even that has moved over the years. It has moved from 1,200 to 1,500 to 2,200. So all in all, in store expansion, if you see, all good, nothing to complain about, right? Next, if you see about the result, right, here it is where is a little bit disappointing. See, you are telling me that you want to achieve 100 crores in revenue, right? 100 crores in revenue. Now, if you see the Q1 FY23, they have done around I think 5.5 crores in revenue basically, and the entire FY23 they have done 28 crores in revenue. So basically, in Q1 FY23 they clocked in 18% of the total year ka revenue, right? Is saal they have grown. I'll just give you the year-on-year basis, 13.5% on a year-on-year basis, and profit has grown by 39% on a year-on-year basis. So a very mediocre result. All the operating leverage is there, good amount of operating leverage, but very, very mediocre result for me. I'll tell you why. 13% is low. If in fact, if you're targeting that 100 crore per top line, because if I have to take the same calculation, आपको 18% करना है, right? So whatever you have done into 0.18, if you do, you have to clock in at least 36 crores in revenue by by FY24 for this entire year, FY23, FY24. Which means what? H2, you have to really, really pull up your socks and do it. It's like in H2 for them, it is like, how do I tell you? Think about it in like cricket. You have four balls and you have to score 24 runs. So you have to put sixers, tuck in all the four balls. So similarly here also, management has to really, really execute here if they have to make that 100 crores in revenue, because Q1 has been very mediocre. So I hope that Q2, Q3, Q4, it all comes into place, and something we can see. Also, another problem I can also see here is because ye Coco se Foco mein ja raha hai, and the stores are recently recently opened also. Because of that, see, you won't make sales since day one, right? It will take at least sometimes it might take 3 months for a store, or sometimes 6 months for that store to to be completely operational and everything, right? Maybe because of that also, the top line hasn't been that great. Maybe that is also a reason. But having all, I don't want to give any reasons also, still the revenue, the top line that you see has been a bit mediocre. The other reason why you will also see, the like I told you, the top line will be visible. आपका जो store expansion कर रहा है, इसके वजह से you can see the top line will be visible, of course. But another thing that will happen here is operating leverage will lag, because you're putting so much capital into getting the store, getting the inventory, everything out, paying your franchise and everything, all of these things. Your bottom line जो है, like although in absolute rupee terms it may grow, right? Percentage wise it might not grow, right? As a result क्या होगा, आपका जो profit है, it will not grow faster or more than that of your bottom line will not grow faster than that of your top line, right? So kya hoga? Operating leverage, it will show a lack in operating leverage. Why am I telling this? Is because if you see the likes of Metro Brands Limited, right? Metro Brands Limited, a great company. In Q3, they opened 48 stores. They had opened 28, but they did exceptionally well 48. Because of that, since you're opening more stores, uske wajah se kya hua? Their operating leverage fell, right? The bottom line fell, and the operating leverage fell, right? In rupee terms, if you see, it has grown, but in percentage terms, it didn't grow. But at the same time, in Vector and Ethos, the operating leverage was visible. Because of this operating leverage, you saw Vector and Ethos, the rate at which the stock moved was greater than that of Metro Brands Limited. Fundamentally, nothing wrong. Only one thing is the operating leverage. The operating leverage will be lacking because of the expansion or the aggression in which that they're opening the stores. The other interesting thing that is happening here is product mix change. Again, like I told you, 3 things that makes me interested about this business. The last thing is the product mix, which is an absolute game changer here. I'll tell you one thing. If it were a normal, ye brass and copper ka they're selling jewelry, I wouldn't have been interested. Why am I telling the importance of product mixes here? Is, see, if you see the likes of Barun Beverages, because Stingray, what is wrong with me? Because Sting came, the entire product mix changed, right? And after that, you saw an operating leverage come into play. That is number one. Even in terms of Vector also, you saw that operating leverage come into play. Why? Because product mix changed, right? Mankind Pharma also same thing. So because of the entire product mix, you saw a margin expansion, and that margin expansion gave rise to operating leverage. Here also same thing is going to happen. What the company told us, that they want to introduce diamond stud 14 karat diamond studded jewelries. Now this diamond studded jewelries, it will range somewhere between 15,000 to 50,000. This will be the range of the product category, and it will be 14 karat, right? Now iske wajah se kya hoga going forward? The revenues, if you see, 40% will be contributing from diamond jewelry, and 60% will be contributing from your normal abhi jo hai wo fashion jewelry, brass and copper ka jewelry. Now because of this, the product mix can change, and after that, the entire operating leverage can come into play. But having said that, let me just do a basic calculation for you. Again, I don't have Excel, don't come at me. See, what is your current operating profit margin is 22%. I'll take 20% for easy calculation, okay? And what is that? The company has told going forward, because you're going from cocoa to FOCO model, that the operating profit is going to, sorry, the profit margin is going to fall, and the profit margin will come to 9%. Okay. Now think about this. On 20% ka profit margin, the profit is around 5 crore. 5.5 crore. Let's take 5 crore. 5 crore is the profits that they're making. 9% का profit margin में कितना होगा? See, what is the profit margin का formula? Profit margin is nothing but net profit divided by sales, right? Net profit divided by sale. So profit margin is around 9%, and they're telling that the sales by FY25 will be 100 crores. So 0.09 into 100, right? That is around 9 crores. So 2x in profit, whereas your sales are increasing by 2.5x, right? Like around 28 crores से 100 crores हो रहे हैं. So like I told you again, because of the cocoa to FOCO model, आपका operating leverage यहाँ पे नहीं मिल रहा है, right? As a result, the worst case scenario में क्या हो रहा है? Profit is going to become 2x, and there is no operating leverage coming into play. Now, the best case scenario I'm taking, because again, their product that is there, the diamond category, is not as great as carat lane at all. Carat lane gets up to, I think, 18 carat, 20 carat diamond. So there, even their margins is higher. Their margins are, I think, around 35 to 40%. So let me assume that, considering because of this diamond, यहाँ पे थोड़ा margin expansion होगा 9% से, although they are in a FOCO model, 9% से, let's say it is becoming 15%, right? So 0.15 into 100 crores, right? So around what? 15 crore? It is still 3x in profit. So the best case scenario, it will give you 3x in profit. At least there you can see a little bit change in operating leverage jo hoga, kick hoga. So all in all, the entire thing comes into one thing. Entire here, the business that is there comes into one thing, that is product mix के वजह से operating leverage, product mix के वजह से margin expansion होगा, margin expansion से operating leverage बढ़ेगा. This is the entire game changer. The only thing that can push this business up is this only one thing. If they have to get that goddamn Hira, that's it, right? So this is all that is there on the business. Let's just finish it off with the risk. What is the risk that is there in this business, right? One thing is, the competition from both organized and unorganized sector is huge, right? I understand, they are a good business. They have been there for a long time, trust, etc., XYZ things. Good, all in all, great. But I'm not going to deny the fact that there is immense amount of competition. Even in an organized space, if you see, even Tanishq has, Tanishq, Swarovski also comes with a brand, right? Like great brand. There's another one, Kushal's, all of these people also, in a branded play also, in organized play also, there is enough competition. Even in organized play, even in unorganized play also. In unorganized play, see, I'll tell you this because I'm a woman, right? You just go to Instagram today and just search something like gold, like gold studded jewelry. And then the next thing, while you're scrolling through your reels, you're going to have 10 advertisements being popped onto you, and 10 e-commerce sites that are also providing, even if not a very very good quality, very great quality, and great supply chain also, a good website, good supply chain, all of the things you can imagine. There also it is happening in an unorganized play also. So there's immense competition on both ends. The second thing is raw material price volatility because of this brass and copper, iske wajah se ho sakte. Again, this is the worst case scenario, but you cannot deny the risk. Like I told you, organized to unorganized player is a huge shift. But having said that, if you see, it is a very very long shot. If you have to go from organized to unorganized play, one thing that is very essential for you is to have brand. And I don't see Gargi as to like having a brand value, here. It is not that, it is not that visible, I can tell you, right? Compared at least to other brands. The other thing, one of the things they take pride on, Gargi takes pride on, is the fact is their unique selling point. The unique selling point they tell is the price point, 500 to 2000 category, and the fact, they are like fast fashion, they keep reshuffling it. But dude, like that is how every fast fashion jewelry brand is. You go to, like I told you, right, even in unorganized play, up Instagram ke koi bhi shop mein jao, you find all this e-commerce play that is happening in Instagram. Even those people are doing the same thing only. In fact, if you see, their jewelries are even more affordable than Gargi ka jewelries that are there. It is not like Gargi is doing something different. In fact, I'll tell you, these people ka product category they're telling that 20 to 25 people, working class women that are there. And if I go, like I'm in that category, right? And if I have to see, like if I have to even see the people around me, right? These people are more into fashion trends, and they'll see like, oh, Hailey Bieber is wearing this kind of earring, and then they'll go and search, what is the dupe of that earring, right? And there will be 100 people on Instagram selling that, and they'll be doing it so quickly, right? I don't see Gargi doing, at the end of the day, those kind of things also. Like when they usually tell, they're catering to fast fashion and everything. So both of their unique selling point that is there, whether in terms of price or whether in terms of reshuffling product also, that also goes really out of the window actually, right? So there is no moat that comes into their entire play. That is one thing. And the second thing is, of course, the EBITDA margin jo hai, it will be impacted due to the 14 karat diamond. That is given a nature of the business, because you have to get the diamond, you have to pay upfront, and then after that you have to source it to your franchise and everything. This is a part and parcel of the game. Because of that, EBITDA margin is impacted. I don't mind the EBITDA margin being impacted. It is okay unless until there is growth in the business. What concerns me is the fact that the operating leverage is not there in the play, right? That is a huge point of concern for me. I'm okay with the EBITDA margin falling because of a new product category aa raha hai. It is okay, but agar operating leverage nahi mil raha hai, that is like a bit of a red flag for me, right? And of course, they are telling about 100 crores of revenue. Like I told you, like I did that calculation, like 18% ka, if you have to, like I did, right, in the result cut thing, I did that calculation and I showed you the result. The Q1 FY24 result falls really, really short for that 100 crore ka target. The execution, they really, really have to ramp up with the execution in the H2 at least, really pull their socks into, and I hope they do that. So all in all to end it. If you see the pros is the fact that they're a very low market cap, good company, management is great, high trustworthy, ROE is there, high pace of growth, right? Store expansion jo bhi hai, store expansion is also excellent. Like I told you, no problem with that also. Guidance is there, everything. What are the cons? The cons comes into one thing: all the assumptions that I've taken in, whether it is the revenue calculation that I did or the profit margin calculation that I did, I assume that the fact that they would do 100 crores in revenue, execution becomes a problem. I hope they are able to execute. That is one thing. The second thing is, like I told you, I will be interested in this business because the product mix is changing. Diamond aa raha hai yahan pe, hira. That is the only thing that excites me about the business, because of product mix. Product mix jab bhi change hota hai ek business mein, right? ROE बढ़ता hai, you can see the margin expansion happening, and operating leverage. Because of that operating leverage is everything. Yahan hai खेल, right? Because of that, I will be interested. But having said that, right, since they're moving to coco to foco, unka profit margin गिर रहा है, and I hope this product mix के वजह से उनका margins will expand, and that gets reflected. Margins will expand, and that will get reflected in operating leverage. So all in all, the entire 100 crores of revenue, I see that, like I told you, I hope they're able to execute it, and I believe also the fact that that 100 crore ka revenue will be possible if they get that diamond ka play into this. Otherwise, if there is no diamond here, and if there is no diamond, I don't think I would be really interested in this business, because like I told you, there is no brand presence here, there is no moat in this business. It's still there is nothing unique about this business, having said that. Otherwise, so only thing that excites me here is that change in product mix. Because of the change in product mix, that operating leverage, one second, yeah, because of the change in product mix, that operating leverage will kick in. Like I told you, the best case scenario is, that change in product mix ke wajah se, that profit margin jo hai, from 9% it can go up to, like, let's say 12 to 15%. Still it is a 3x in profit, and then operating leverage will kick into play. That is all, right? Otherwise, if not, no, I that is my only issue with the business, is that operating leverage coming into play with the change in product mix. So yeah, that's that about PNGS, Gargi. I hope it made sense, and see you again next time with a new business model and a new result update. Until then, goodbye. Take care. Tata.